Bharti, etc., all sulking in trade. Banks per se looking slightly wobbly here because you can see Axis, you can see IndusInd and ICICI Bank amongst others. But the gainers and the oil and gas space continues to do well. Metals continue to do well. So BPCL out there amongst the list of gainers along with ONGC. So that bucket is doing okay. Hindalco and Tata Steel are doing okay. Is this a sell on rise is what we'll ask our experts. There is strength in TCS. So that is giving that bit of a leg up to the IT pocket as well, and which is looking okay. Effectively a lot more green, but because banks are sulking and Friday's main boy HDFC Bank is still in the red. So flattish afternoon for the markets today. Is the bias towards the upside? I think that's the key question. Very likely so. It is. Hersh, how are you looking at the broader end of the spectrum?
Yeah, let's pull up the advanced decline, Niraj, because that's been an interesting picture. If we can do that, we're also looking broadly at where the broader markets are. They seem to be holding up fairly well. There you go on the advanced decline. You can clearly make out that the advances have outstripped the declines by quite a bit. So the breadth of the market looks quite strong in that sense. And that's pretty much reflective of where the small and mid-cap indices are at. Let's pull up the Nifty mid-cap, up around 0.25% or thereabouts. The Nifty small cap is up a solid 1.4 odd percent. So strong gains coming in where the broader end of the spectrum is concerned. Let's talk about some specific names before we move on. You have some bulk deals happening in some of the larger cap companies. Let me try and cover those. Tata Steel up 2.5% plus as we speak. You also have Coal India. A couple of blocks that have happened on a couple of these counters. Outside of that, some names which are buzzing. Hindustan Zinc is down 4.5 odd percent. DCX Systems up roughly 5 odd percent. You have the likes of the PNB as well as SBI, which were in focus. Let's pull those up as well because PNB is up 2% and the Nifty PSU Bank in general is doing fairly well in trade today. Outside of that, if we can try and also pull up some names on the back of brokerages, favorable brokerages. Let's pull up Voltus up 4.5 odd percent on the back of numbers and good brokerage notes coming through, good commentary coming through from the way analysts are viewing this one. You're looking at a Glenmark Pharma, which is up 4% as well. Paytm up 3.5%. Dixon Tech, EMS counters, Dixon Tech, Amber, if we can pull those up because Dixon Tech is up 3%, almost 3.5% in fact higher in trade as we speak. Among the losers, you have something like a Mazagon Dock down 4.5% after ICICI, kind of tough note where they've given us 70% downside on the counter. So those are just some of the buzzers in trade. Outside of that, couple of other ones also that we could possibly highlight in trade today. Let's pull up something like a PB Fintech. Let's pull up a Zomato because Zomato was up 2% as well. So you have PB Fintech, which is down 2% in trade, but Zomato was higher in trade, now absolutely flat, giving up all of those gains after that UBS note came out. So plenty of stocks to talk about, but let's quickly go across to Ruchit Jain, who's joining us, lead analyst, 5paisa. Ruchit, how are we viewing markets? At least the benchmarks are having a sideways move in trade today. But what do you make of both the benchmarks as well as the broader end of the spectrum where all the action seems to be lying, at least in trade today?
Yeah, hi, very good afternoon. Well, if we see last couple of weeks, in fact, in this entire month of August, we initially witnessed some price-wise correction in Nifty along with the global markets. But last 1 week we have seen more of a time-wise corrective phase, and the markets have managed to show a decent pullback from the 24,000, 23,900 support zone, which was the 50 days exponential moving average. Now the 61.8% retracement of this entire corrective phase, which we have gone through in last couple of weeks, is coming around 24,650. So I think that's why today we can see that markets are resisting around those levels, 24,630 to be precisely it is. So markets are resisting around those levels, but the market breadth has not deteriorated. In fact, the market breadth remains strong. It's only because of the banking spaces which is not doing well, especially the private sector banks, and that's why we are not witnessing a momentum in the index. But overall market breadth doesn't indicate that markets would go through any kind of significant price-wise correction now. So I think we may see some more consolidation in the near term in the benchmark indices. but downside seems to be very limited. And once we surpass that 24,650 mark, I think we should see a gradual up move, because many of the names from the index heavyweights from the IT space are doing well. If you look at the FMCG space, some FMCG stocks are still looking strong. So I think price-wise downside correction now seems to be very limited. It may be just a time-wise correction for the index, but yes, the stock-specific opportunities are good to take some long positions here.
Right, we'll freeze in on that one, on this particular graphic that we have. Look at the metal index and the PSU bank index. So much strength, 1.7% higher on metals, around 1.3% on PSU banks. Ruchit, your view with regard to PSU banks in particular, because they are resilient otherwise as well. In a broader sense, they've done fairly well.
Yes, they have gone through some good time-wise correction as well in last 3.5 months. We have not seen any new highs coming in many of the PSU banking names. But I think this index is trading around its support, where 6,750, 6,800 is a good support level. So the downside seems to be very limited on here on. The momentum readings are oversold, and so some of the stocks are witnessing a positive divergence. So quite possible that we would at least see a pullback move in the near term within the PSU banking index. And even if it continues within the range, and because the index is trading quite close to the lower end of the range, so the risk reward ratio is definitely favorable to take selective contra bets over here.
Okay, Ruchit, your picks for this afternoon?
Yeah, so a couple of recommendations both on the buy side. One, we spoke about the IT earlier, where the momentum seems quite strong. A resumption of the uptrend post a corrective phase is seen. HCL Tech seems much positive over there, where a high top, high bottom structure is getting continued. So HCL Tech, we believe that can rally further from current levels. So here also one can look for buying opportunities with stock below 1620 for potential targets of 1780. And HPCL is another name where one can look for buying opportunities over it. In fact, if you look at the OMC space, except IOC, both HPCL and BPCL have been forming that high top, high bottom structure. In the mid of February, we witnessed all-time high in the OMCs. And after that February months, we have seen long time-wise corrective phase in this in all the three names. So I think IOC only is the name which has not shown a signs of an uptrend yet, but both HPCL as well as BPCL have started gradually forming that high top, high bottom, and the volumes have started increasing over there. So we are positive on both these names. HPCL would be my pick to go long on over here with stock below 375, expecting targets of 405.
Okay. Well, OMCs out there doing okay. BPCL the top gainer as well today. But our stock of the day is Glenmark. Now the stock rose as much as 4% actually after Motilal Oswal upgraded the stock to a buy rating. Varsha has the details. Varsha, good afternoon.
Good afternoon, Niraj. So yes, stock is buzzing on the back of Motilal Oswal reports where they've upgraded to buy with target price of 1,850, implying upside potential of 18%. Now, operationally, according to Motilal Oswal, the numbers of Q1 were in line. Domestic formulation and European Union drove earnings. They've raised earning estimates by 11% and 17% for FY25 and 26, factoring in niche product pipeline in respiratory for US generics, outperformance versus the industry in domestic formulation segment, and reduced spending on R&D. They expect to deliver part of rupees 1,670 crore in FY26, and according to them, company has restructured its business model by focusing on key market areas, hiving off API business and recalibrating spending on innovative R&D. They believe company is gearing up for consistent turnaround in its overall performance. Now note that a company has target of around 13,500 to 14,000 crores for FY25 in terms of revenue, with EBITDA margin of 19% for FY25, and they are targeting double-digit PAT margin in FY25, and they expect India business to grow around 10 to 15%. And Niraj, I want to focus on one more stock, that is Caplin Point, which surged 14%. It has received zero observation for Caplin sterilized injectable and ophthalmal manufacturing facility by Anvisa, that is Brazilian regulatory unit.
Okay, well, some positives for Caplin Point for sure. Actually, before we take that break, couple of questions. Ruchit, come in on Glenmark and Caplin Point. I don't know if you track either or both on the charts.
So I think the trend for both the stocks are positive. Technically, we have seen that the high top, high bottom structure is still getting continued. In fact, if you look at Glenmark Pharma, then in any kind of corrections, we have not seen any significant price-wise corrections happening. And the stock has not breached its 40 days exponential moving average in the last 2.5 months. So I think this is just a continuation of the trend which could go on. So if any existing long positions are there, it's better to ride this trend with the trading stop loss method. And even Kaplan point, I think today, based on the news flows, the stock has seen a breakout. But if you look at the volumes, then the volumes are quite high compared to its daily average volume. And usually when we see such high volume breakout, then those stocks tend to outperform in short to medium term. So I think, yes, Kaplan point also looking quite positive. If we get any kind of dips towards that 1700 mark, then the risk reward ratio would become favorable because the stop loss would be smaller from those levels where 1500 could be the stops and can expect targets somewhere in the range of 1900 to 2000.
Okay, well, time to slip into a break on the note that the broader markets are doing okay and Nifty IT in particular is doing so well for itself. Well, last week, best performing index, Friday a breakout move and today a continuation of that. Really, really impressive what's happening with the IT stocks. We dig deeper about this and some more on the other side. Stay tuned.
Welcome back. Good afternoon. You're watching India Market Close here on NDTV Profit. Now, just quickly on to some of the Nifty gainers. If you can just pull those up in terms of top gainers on the Nifty 50 today. Shriram Finance really standing out within that pack, 3% higher. Of course, that's the contributories on your screen, but just in terms of top gainers, just pulling that list out, Hindalco, BPCL, Shriram Finance, those are the three top gainers on the Nifty 50, 3% higher on Shriram Finance. That stock has, of course, been in focus, has been buzzing. But Ruchit, you're with us. Talk to us about how this one looks on charts before I come to OMCs, because that's the other interesting piece of the puzzle, at least in trade today. Pretty much all oil and gas stocks doing fairly well in trade. But first off on Shriram Finance, your view with regard to charts.
It's more of a continuation of the uptrend. If you do some relative analysis compared to what the correction that we have seen in the markets in the first half of August, this stock did not witness any kind of price-wise correction. It went through some consolidation, which was more of a time-wise correction, and has now resumed its uptrend. So I think the trend continues to remain positive. The price up moves have been supported by good volumes in the recent past, but the corrections have not seen any kind of high volume sell-off. So I think this should continue its uptrend, and the support base for the stock has now shifted to 2800 levels. So till it is above that support, I think the stock should gradually continue its gradual up move.
Okay, I also have with me Sudeep Bandyopadhyay, Group Chairman in IndiTrade Capital. Now, Sudeep, a positive note coming on Shriram Finance. There's been significant stock movement as well. It's up over 60% in the last 12 months. Very strong in terms of shareholder returns. Of course, there's been a special situation which has played out in terms of merging two NBFCs. Talk to us about Shriram Finance. How good does it look? It's beaten its guidance for sure and likely will beat its full year FY25 growth guidance. But how does it look fundamentally, valuation-wise, as well as from an asset quality perspective?
Well, I think they have done remarkably well. And I think the merger of the two entities led to a momentum coming back in the counter. But having said that, I think the valuation at which now it has moved and it is quoting, I don't think there is too much juice left in the counter at this stage. Yes, they will beat, and they have been beating the expectations. But the valuation also is rich at this stage. It's about 2.1 time book. So I think at this stage I will wait and watch. If you compare this with many banks, I think the valuation looks cheaper of those banks. So I'll wait and watch. Okay,
so valuation of banks looking slightly more lucrative. So on a relative basis, Sudeep liking banks. Sudeep, which names in the banking space are you looking at?
Well, I think HDFC Bank has been a favorite for some time. Yeah, I know it will take time for it to show its true colors, but I think, they're close to that point where things have started improving. Look, as far as the entire BFSI, particularly the banking space is concerned, from an asset quality improvement matrix, which was being monitored, now we have come to a stage where asset quality improvement is not likely to happen in any significant manner for the leading players. It's a question of their capability of mobilizing deposits at an appropriate cost. I won't say low cost, appropriate cost. If and whichever bank is able to do that, I think they will be successful because there is enough and more credit demand. So the credit demand needs to be met by mobilizing reasonably priced deposits. Now, bank like HDFC Bank, with the kind of network they have, is in a very good position to do that. I'm not taking away anything from an ICICI Bank or an Axis Bank or even SBI, but the fact remains that HDFC should start doing well, vis-a-vis many other banks which are currently the darlings.
So HDFC Bank is a consensus buy, Sudeep. What are the triggers you feel will change the kind of perspective that investors have of the stock? Because currently it's clearly not a favorite.
No, absolutely, you're right. It's not a favorite, and that's the reason why I'm saying it's an opportunity for a little aggressive investor to buy into HDFC Bank for let's say 6 to 12 month kind of a hold. They come up with monthly numbers for their multiple parameters. I think the moment the deposit mobilization numbers will start looking good, things should start changing for HDFC, and I expect that to happen very soon.
Okay, deposit mobilization. How is it looking on charts, Ruchit, HDFC Bank?
So we have seen some corrective phase in HDFC Bank in last 2-3 weeks, but the stock has managed to hold above its 100 EMA, which is now around 1570. So from a short-term perspective, the stock seems more of a range bound, but 1570 is a good support base. If it manages to hold that level, then we can see some pullback move back towards 1700, 1720, which is the higher end of that range.
Okay, so those are some levels to look out for. Let's quickly switch focus from banks, NBFCs to none other than defense. Mazagon Dock, stock which is trading under pressure today. ICICI Securities came out with a report. Nirmal Bang maintains its sell rating. Anushi joins us with the rationale behind these heavy kind of sell ratings, especially from ISEC.
Right now, Hersh, the main point of stock falling today, about 5% of an intraday that we are looking at, is on the kind of target price that has been set by ICICI. Now, despite the sell rating, that's not that is one of the key aspects that we'll talk about later. But it's the target price which has the street, and it's the one that the street is viewing at with a surprise over here. Target price is set at about 1,165, which implies a 77% of a downside from the current levels. And this target price has been raised from the earlier level of 900 that they had held earlier. Now, a couple of reasons that they've given. First is that despite the strong performance that we are seeing, the valuations continue on the higher side. But just to give a wrap up on what ICICI had to say about this, margins were aided by lower provisions and before time deliveries. That is why margins were a beat. But and these elevated margins are expected to continue with the deliveries ahead of the schedule. So the 25-26% of EBITDA margins that we are looking at are going to sustain at these levels. Considering which they've increased their EPS estimates by 51% and 73% respectively for FY25 and 26 onwards, and why we are looking at the target price now set at about 1,165 as compared to a 900 rupee earlier. Again, however, they do believe that these margins will start tapering off once the new contracts will be executed, and the current order book also will be executed by FY26 end. So valuations, one of the prime reason, and this is what even Nirmal Bang had to say in its report. They've maintained a sell price at about 4,468 crore, at 4,468 per share. So again, not such a big downside as per ICICI, but still we are looking at 10.6% of downside from the current levels. The top line growth that the company came out with was a miss versus the expectations that they had set. The brokerage continues revenue, EBITDA and PAT to expand by 22%, 59% and 31% respectively during the FY24 to 26 period. However, they've downgraded the whole defense sector in general with a sell rating before a month. This is because of the kind of valuation run-up that has happened versus the stock run-up that we are looking at. Believes that the valuations are much higher than what the fundamentals provide for the investors going forward. But that is on one side. But on the other side, they do believe that the Navratna status will help the company in attaining more goals for the business going forward. So this is expensive valuations for both the brokerages as to why we are seeing the downside in the stock that we are looking at.
All right. Thanks a lot for that, Anushi. I don't know about 70% downside, but there's some pullback that has come into these stocks for sure. Sudeep, and actually then to Ruchit as well. But Sudeep, to you first. Last 24 months, dips into defense stocks have been bought into very, very strongly. Do you believe that this current dip that we're seeing in these businesses will get bought into as well because of the order books, etc., or at some point of time the expensive valuations catch up with you?
Well, Niraj, I really can't comment whether this will be bought into or not. But the question is, at some point of time, the music has to stop. Because, I think we have discussed this earlier also in your program. These are good companies. They're doing well. They are getting orders left, right, center. It's great. Everything is going right for them. But that doesn't automatically translate into that kind of an astronomical valuation. Order inflow cannot be equated with every order inflow brings in another 10-20% upside. That's an absurd situation through which some of these PSU defense and railway names have been going through. It's just sheer euphoria. It had to correct somewhere. These are good companies and they will come back and give this kind of valuation at some point in time in the future. But today, do they deserve, does Mazagon Dog deserve a $5,000 price? I don't think so. Whether it will settle at 1,165 or 2,000 or, that's very difficult to predict. It depends on multiple things. But at 5,000 or 4,700 even, these are, very, very expensive valuations. And, whether they will correct sharply or there will be time correction, one doesn't know. But correction has to happen at some point of time.
Most certainly. Ruchit, any supports that you would keep an eye out for, or do you believe there are more downsides here?
Well, I think there could be some short-term correction in the stock. Mazagon Dog, especially if you see, then the stock is a good support around that 4,500 level. So we need to see whether that support gets broken. If we see breakdown below that 4,500, then we can even see 4,000 levels in the short term. So that does not change the long-term trend. If I look at the monthly chart, then it seems that these are just the retracements of the entire previous up moves which we have seen. But because the run-up was so sharp, and hence even if the stock retraces by 23.6% or 38.2% of the previous up moves, then we could see a decent price-wise correction from the recent swing highs. But I think these are just corrections within an uptrend. It's difficult to say where would this stock bottom out to start the next leg of up move. But until we get any such signs, I think one should just wait and watch for some kind of reversals coming in. So I think some of the stocks would go through some price-wise correction. Maybe names such as GRSE is there, Mazgaon Dock is there, which have rallied very significantly. But if we look at the momentum readings of some of the other defense names such as HL or BL, they have already corrected from the highs with a time-wise correction. So I think there the price-wise downside seems to be very limited.
Okay, well, that's some stocks to monitor in the session today for sure. The other aspect is what's happened to some of those platform businesses. Hersh was talking about it briefly, but I was looking in the morning. Zomato, in addition to Ola Electric, was doing well. Ola Electric, of course, is still gone berserk, but Zomato is now marginally in the red. The circuit on Ola Electric did open for a brief bit, but Zomato, no such luck today. PB Fintech should come up on your screen too. Let's just see what that one is up to, because that one has had a decent run in the recent past. In today's session, a bit of a corrective move too. And Paytm should be the other one that we should try and highlight. And that one is up about 3.5%. Beautifully, Hersh. I remember we did a show with Sanjeev Bikhchandani on the platform businesses about a year and a half ago.
Okay.
Zomato was at 45 or 50. Paytm was circa 600. PB Fintech was 700 odd. So PB Fintech has doubled or more than that. Paytm has had no such luck, but Zomato has given over 5x returns.
Yeah, absolutely. And of course, a lot of it is also to do with the fact that a small marginal increase in platform fee, which it charges users, makes a very large difference when it comes to both top line as well as bottom line. And as it scales, even if it were not to scale, but even on the existing pin codes, the kind of profitability keeps going up because of the number of users on the platform. Yeah. Of course, scale pulls down some of the profitability as it continues to scale, but outside of that, that's and also it's a monopoly sort of business, a duopoly of sorts. So that kind of helps. It'll be very interesting to see when the Swiggy IPO actually comes. What kind of reaction it gets, and the impact of that on a Zomato. That'll be interesting to watch. Now, but if I were to just shift focus to a Paytm, because we have a Bernstein note which came out today morning, there's also a little bit of a flavor there that there's a possibility of a takeover by a bank, financial institution, or the like. And Bernstein explores that a little bit in its note. But more importantly, they talk about the base case, where the business is likely, according to them, to turn profitable in FY27. They're expecting post that also Paytm to deliver good, strong EPS growth. But if at all this were to happen, a marriage with a bank, maybe an HDFC or an Axis, just examples out there, a marriage with a bank will unlock maximum value for shareholders. That's what the note essentially says. Then there's something in the middle where a corporate entity takes over equity interest. That would unlock value too. A further upside risk, or rather further upside on the stock from the 600 levels, would be a scale up in the secured loan distribution segment, expense control, fee for UPI payments. That's what at least Bernstein seems to believe. Last off, they value it on the basis of FY30 EPS. Price to earnings of 20 is how they valued Paytm, because it's so interesting how some of these businesses are valued, Niraj, and just trying to give that flavor. And then they discounted it backwards towards FY26 and gave it a discounting factor and gave it a value of 600 rupees. So we've pretty much met that valuation. They maintain their buy stance on this one with upside risks, of course. Let me quickly go to Sudeep. Sudeep, I kind of have detailed out Bernstein's views. Give us yours.
Well, I think I'll not buy into this logic of a bank acquiring Paytm. I don't see too much of a logic as far as the bank, in acquiring the Paytm and its, employees and network. Limited utility for a bank, so they won't be willing to pay the kind of valuation which will, make the Paytm shareholders happy. So I won't target there. But yes, I'm not sure whether it is FY27 or 28. At some point of time, if Paytm continues to pursue its distribution business, loan distribution business, that is unsecured as well as secured diligently, and keeps executing properly, I think they should become profitable. And they should start, rewarding shareholders based on a concrete EPS and business. At this stage, still a lot of things are fluid. So I don't know, you can always impute a value and discount back from FY30 and things like that. But I think it's a little far-fetched to me. I will wait and watch. I don't think I will buy into that kind of evaluation at this stage. There is a possibility, but all depends on execution and all depends on how things pan out in the near future. But just one small point on this entire platform space, Niraj talked about quite a lot of them. One company I wanted to point out, which I like, is delivery. I think that's a fantastic business. The execution hasn't been anything great since their listing and have disappointed the shareholders, consistently. But last quarter results, that is Q1 results, at least the green shoots, to me at least, were visible. And I think this can be a fantastic business. And it's maybe sometime in the near future, we will be discussing, how they turned around and how they delivered a return finally to the shareholders.
All right. Thanks for that detailed breakdown, Sudeep. We'll slip into a very short break. On the other side, we'll get you top buy today, sell tomorrow picks, as well as look at what's on the agenda for PSBs and RRBs, which is public sector banks and rural lenders, in the meet with the finance minister. Stay tuned for a couple of those quick updates and along with taking more views.
Back with India market close right here on NDTV Profit. That time of the show when we try and get you a breakdown of the derivative cues and what are they pointing towards. Agam is here as usual. Agam, what is the data telling you?
Oh, well, it's a quiet day of trade today, but we're, at least as far as the Nifty is concerned, holding on to 24,500. A little bit more relative weakness as far as the bank Nifty goes. And all in all, well, it's been a fairly range-bound session. So the Nifty holding on to exactly where it was in close last Friday, unwinding, coming in to the tune of 2%. The bank Nifty, on the other hand, coming off by about 0.4%. Lost out on 50,500. No worries, we're still holding on to 50,000 at the moment, and we see about 5% increase in open interest there as well. As we move into trade this week, of course, we're, in terms of options markets, 24,500, 24,600 is the round which we are expecting the Nifty to move within. Of course, in terms of a broader range, it is essentially going to be about 25,000 on the higher end, where we do have a considerable amount of accumulation in open interest calls, and on the lower end will be 24,000. In terms of stocks, again, it's a fairly mixed day of trade, but we have more longs than shorts for now. Birlasoft, Voltas, Glenmark Pharma, and Metropolis among those which are seeing longs coming through. M&M, on the other hand, looking at shorts. And among stocks which are seeing unwinding, long unwinding for Indian Hotels and HDFC Life. Aarti Industries and Piramal Enterprises stand out. In fact, Piramal Enterprises has wiped out all the losses that we saw last Thursday based on the kind of cues that we've seen on Friday and today. That's just one of those aspects, which is playing out in the broader markets. Again, all eyes will continue to be on the benchmarks and where we go as we move into a week which doesn't exactly have a lot of big triggers coming through.
All right, thanks so much for that, Agam. We'll have to, of course, see how the week unwinds. But one piece of news, the second half of Finance Minister Nirmala Sitharaman's meeting with regional rural banks is underway currently. The Finance Minister has already completed the first half of meetings with public sector banks today afternoon. Here's Rishabh Bhatnagar with the agenda as well as what's being discussed. Rishabh.
That's right, Hersh. I'm stationed right outside Vigyan Bhavan, where the Finance Minister is currently meeting up with public sector banks as well as regional rural banks. In the first half of the day, the Finance Minister concluded the meeting with the public sector banks. A few key points that were discussed in the morning were on the performance ratio, a performance review on deposit growth as well as credit to deposit ratio. There was a point on current status of the accounts that are being acquired by the NARCL. Apart from that, the performance under schemes such as the Pradhan Mantri Awas Yojana, Surya Ghar and Vishwakarma Yojanas, all these were also discussed with the public sector banks. What is to be looked forward to is when the Finance Minister actually comes out after the meeting with the regional rural banks, and on that agenda is the status of technology upgradation in these banks, MSME initiatives that a lot of these banks are taking, and what the impact of the recent government interventions has been on these RRBs. So this meeting is expected to conclude at about 5 to 5:30, and after that we can expect a press release or some sort of communique from inside, and to get more insight on what has occurred today.
Right. Thanks for that, Rishabh. In any case, PSBs are buzzing in trade today. Let's pull up some of those counters and let's go straight to Sudeep, but take a quick viewpoint because we did take a technical view from Ruchit earlier on the show. Sudeep, with regard to technicals, with regard to fundamentals, I beg your pardon, some of these stocks have really corrected from a valuation standpoint. Some of them are valued at more than 2 times price to book. Do you believe that some of these valuations are sustainable? What's your viewpoint on some picks which you would have to make within the PSB space?
Well, I think there is definitely merit in the PSBs quoting at a lower valuation because I think, we have to accept the fact that the performance and the management has improved quite a lot compared to what it used to be, let's say a few years back. And the kind of branch network they have, they are also in a good position to mobilize deposits. To my earlier point that the next few years, the banks which are able to mobilize deposits at a low cost or an appropriate cost will be the winners. So we'll have to wait and watch who are becoming successful in this particular space. We like State Bank of India in spite of it not being cheap in that sense. Because of course the kind of network, the kind of presence, the kind of performance, management bandwidth, and the subsidiary performance. So SBI continues to remain our top pick amongst the PSBs. But if I have to venture out of the big one SBI, then probably I'll go for the next big ones, which is Bank of Baroda, PNB. I think these two also at current valuation, because again of the network and the capability to mobilize deposits, will be in my list of favorite banks. I will not go at this stage to smaller banks. They may be attractively valued, but the future may not be anything significantly better for them from where they are today.
Okay. Sudeep, there is the commentary that is coming in from, I'm shifting tracks of course, but the commentary that is coming in from real estate companies based out of NCR and the smaller ones. I mean, DLF is one, but the smaller ones is very buoyant, from a Signature Global to a Max Estates to Anantraj to Tark, and there must be others, but there's very, very bullish commentary there. Now, I would love to understand, because you looked at multiple real estate cycles, right? Can this happen that some of these businesses grow up and become 2-3x from where they are right now, while operating out of that one region of NCR alone? Because it's not MMR, no matter how much NCR might be. So what's your sense here?
No, quite possible, Niraj. I think, channel checks, you can say, are indicating that there is tremendous excitement in the NCR real estate market. I mean, we are not discussing DLF and those pricing properties in Gurgaon. We are talking about, mid-priced properties, lower priced properties. I think there is significant excitement. You're absolutely right. There are a lot of good things happening in the Noida and surroundings. The abundant projects are being taken over by builders, and those are being resurrected. So all that is happening as we speak. And this is on the back of sheer strong demand, which is coming from buyers. Investors may be there here and there, but there is a buyer's demand as well. Because we sometimes get scared when the demand is mostly coming from investors. That's not the case. And investors are getting into, actual buyers, users are getting into buying properties. So yes, possible. Now, who will be the winner is very difficult to say at this stage. All these companies you named had gone through negative patches and had suffered in the past. So they'll have to wait and watch. Balance sheets have been repaired, and the capabilities have been rebuilt. So we'll wait and watch. But yes, the excitement is there.
Okay, thanks for that longish answer, Sudeep. I want to quickly mark out Mishra Dhatu Nigam. Order worth 285 crore. Stock is up. Look at that. Up 4% in trade. Clear reaction to that order win. How significant? Well, 285 crore. Well, the annual top line for the company is around 1,000 odd crore, 1,050 crore. This is FY24 numbers. And makes a margin of roughly 18% blended. Market cap, of course, of nearly 8,000 crore. So stock clearly up 4% on the back of that order win. But let me go across to Mahima, because she's waiting by. Voltus in focus. Brokerages, of course, coming out with their views. There are divergent views. Kotak maintaining their sell rating. Nomura maintaining their buy rating. Jefferies also had upped their target price on Voltus. Mahima, talk to us about views from both sides, the pluses as well as the minuses. The Voltus has had a stellar run.
Right, absolutely, Hersh. So, two interesting notes, both having contradictory view, where Kotak has a bearish view, whereas Nomura has a bullish view. I'll start with Kotak. Kotak has maintained a sell with a target price of 1100. Now, what they're saying is that robust volume growth is there, but UCP, that is the unitary cooling products margins, are disappointing. Now, these margins are impacted on account of discounted sales, higher subvention costs, and rising input and A&P spends. What they're saying is that overall growth in UCP is as expected, but margins of 8.6 are lower than their target of 10%. Now, they've said that limited margin expansion and unchanged guidance on margin signifies a lot of competition, a lot of intense competition, which is why they've given and they've maintained the sell target. Next, in terms of Nomura being bullish on Voltas, where they've given a buy rating with a target price of 1857. What they're saying is that Q1 beats were led by the projects and margin tailwinds are in place. They're raising their UCP revenue growth for Voltas by 30% YOY for FY25 estimates, and they're saying Voltas' strategy to prioritize market share gain over margins is in the right direction. Some catalysts that could support margin expansion include price hikes, moderating commodity prices, logistics savings from the Chennai plant, and overall PLI incentives. And lastly, they've maintained EBIT margins at 9% for UCP, and they've raised PE multiple to 50 times from 45 times. So these are the two contradictory views, brokerage views on Voltas that came out today.
Clearly in favor of Nomura, 5% higher on Voltas, strong reaction. Let's quickly, or rather let's keep focus on the same space, same pack. Blue Star and focus on the back of stellar Q1 numbers. We spoke to the managing director and about, of course, the quarter gone by and what led to the higher margins. Listen in.
We delivered exceedingly well. As you may recall, before the season, we interacted. I had predicted it may be 25 to 30% growth. And we were surprised to see growth of over 40% in the last week of March, 70% in April, another 70% in May. It tapered off in June. Overall, it is more than 55% growth. The industry did extremely well, and I think it is driven by very harsh summer season. And it is a happening industry. From now on, I think the growth will be significant, and we anticipate that the market size from around 14 million, it may be this year 14 million, to around 30 million by 2030. And it is a significant growth that is happening across.
Well, it is, and it may not be showing in the price of Blue Star, but Voltas certainly has had an inch up or two. Chit, any thoughts here? Blue Star, Voltas in particular up nearly 5% now.
Well, the technical trend still remains quite robust, especially for Voltas. What we have seen that the price up moves have been supported by good volumes, and whenever we are getting the in-between corrections in the stock, we are not witnessing any kind of volume-based correction, so which broadly is a good sign. So I think this could continue its uptrend, and maybe towards, if we are looking from a short-term perspective, then 1720, 1750, I think could be seen in Voltas. So the structure technically is looking quite robust in Voltas compared to Blue Star.
Okay, interesting. So Deep, of all the companies that have come out in the earnings season now, that we well and truly behind, in what was rather a muted quarter, save for select names. So I'm just trying to understand what has stood out for you and your team per se. I mean, are there one or two businesses wherein the commentary really made you think that it's some delivery that you're looking forward to over the course of the next 3 or 4 quarters, or maybe longer?
Well, it's a bit surprising, Niraj, but we did find some of the FMCG names coming up with numbers which were very positive compared to what we were anticipating. Take the case of Colgate. I think nobody expected the kind of numbers they came up with. 40% of their business is rural, so very clearly this shows that there are green shoots visible in the rural segment. So this was definitely a positive surprise. The other positive bit, I would say, was Ultratech. we were not expecting the kind of numbers they came up with. But in spite of the bulk, in spite of the size, in spite of the first quarter being not so good for the overall industry, I think they came up with a very good set of numbers. And on top of it, what all they are doing in the consolidation space, I think definitely is worth looking and talking about.
Okay, well, so that's one bucket. And that was the longer term. Ruchit, I would love to, maybe we'll do a longer term conversation to Ruchit, but for now, today, at this point of time, I want a BTST or an STBT from you, a closing strategy.
So I think I would recommend BTST, and especially in some of the metal names, because in last half an hour, 1 hour, we are witnessing good momentum in the metal stocks, which has been supported by higher volumes. And even if we look at the open interest, then it is indicating a combination of short covering and fresh long build-ups. Hindalco within the space is looking good for BTST perspective. So ideally, again, today since the start of the day, the stock has been showing a relative outperformance within the metal space. And from a volume perspective, also the volumes are quite good. So at current levels, keeping a stop below 645, I would recommend going long on Hindalco for potential targets around 690.
All right, let me quickly switch focus. We'll try and get in some market opinion actually. We spoke with Mahesh Nandurkar of Jefferies and asked him about the IT sector. That's one sector which is kind of standing out last 2-3 days of trade. And, we try to dig in and try to understand how it'll fare, especially in the second half of the year, possibly with rate cuts as well. So listen into that.
The results coming in from the IT services companies for the June quarter were maybe a tad better, not a whole lot. And that kind of, that level of positive excitement got priced into the stocks very, very quickly, maybe, just like a few days' time. But, if one takes a step back and, move away from these recent moves that we've seen, in the stocks and the results. But by and large, what we're clearly looking at is the scenario where the possibility of a US economic slowdown is now more today as compared to what it was 3 months back or 6 months back. And that's why, there is this chatter about the rate cuts in the US. So, I see that there is some element of excitement around the IT services sector due to rate cuts. But what I would say is that one needs to go one level deeper and see what is the reason why these rate cuts are being talked about, at a sort of, much more higher probability today. And the reason is that of an economic slowdown or a possibility of, or a higher possibility of, US recession. And those things are definitely not, that positive, thing from the demand perspective. So that is, clearly, one thing to keep in mind. Secondly, now when we talk about the rate cuts, it usually impacts the financials and the banks, in the US in a negative way because of the margin pressure, etc. And BFSI segment is one of the large sectors in terms of the demand contribution to Indian IT services. So from both these standpoints, we don't really see any big reason to be too excited about. Yes, the IT services sector looks like a defensive sector. It is one of the sectors that hasn't really done that well in the last, 8 to 12 months or so. And there is that element of sector rotation that will probably be, playing out. And to our mind, it has already played out to some extent. So beyond that, we don't really see any big fundamental reason to be too bullish on IT services here.
Okay, so not too bullish. Sudeep, your views with regard to IT?
Well, I've been positive for some time and I maintain my positive view. Look, I think, the US recession is to a great extent a hype. There is soft landing which is happening in US. The apprehensions which were expressed a few weeks back also have proved to be incorrect. The rate cut is definitely around the corner. And with all that and with the economy staying robust, the IT demand is and will be back. The cancellations will not be there. The postponements will not be there, and new orders will come. So Indian IT companies, particularly the leading ones, will continue to do well and gain momentum. So Infy, TCS can definitely be looked at from a long-term perspective.
Okay, definitely be looked at from a long-term perspective. So quite constructive, Sudeep, at least from a long-term perspective. Ruchit, on charts, this one has got plenty of support, at least basis the moves both on Friday as well as today. Your sense on this one now?
So yes, I think the broader trend, if you see, then still continues to remain positive. So I think if you look at the Nifty IT index recently, when the correction also was there, along with the global markets, the index managed to make a support base around its 40 days EMA, and again the previous swing highs are crossed. So this clearly indicates a continuation of the uptrend. And the good thing is that this time, the move has been led by the large cap stocks such as TCS is there, Infosys is there. So previously, what we have seen that the mid cap IT names used to gain much more momentum than the large cap stock, but this time the volumes are quite concentrated on these large cap names. So I think if these large cap names continue to show such strength, then IT stocks can continue their uptrend.
Okay. That's IT for you. What else has done well today? I think from amongst stocks which are doing well and perking up in trade, I think HFCL stands out. That stock has had a decent move today, if I'm not wrong, up about 4% and closing in at the high point of the day. So keep an eye out for that one. Today, Action Construction Equipment has had a decent outing as well, if I'm not wrong. So that stock, and look at the recovery in that stock. Godfrey Phillips, 20%, Kaplan Point, 16%. And something that is built onto gains is Triveni Engineering, 13% higher now at 470. This is probably a new 52-week high or a life high for this one. Now, Triveni Engineering or a sugar company, Ruchit, very quickly before we thank both of you.
So I think the structure is quite bullish. The breakout is there above previous swing high, that too with very high volume. So this clearly indicates a breakout on the mid to long term charts as well. Technically, if I take some retracement, then it gives me a potential targets around 530 to 520 range. So from a short-term perspective, I think the momentum still continues to be positive, and we should see that 520, 530 range very soon.
Okay, on that note, gentlemen, Sudeep as well as Ruchit, thank you so much, both of you, for taking the time out and giving us your sense. And the markets, well, as we shut shop, small caps are trading very well, 1.6% higher. And that is where the momentum is, because large caps are lying quiet. But the small cap index, mid cap is 1/3 of a percent. Small caps is the action, 1.6% higher. Really strong move here for the index. Can just get the intraday of the small cap index very quickly, and then get the heat map, of course. And then Hersh will join in to talk about the broader end of the spectrum. But the intraday of the small cap index will come up on your screen before we get the heat map going. Look at this trending move and closing in at the high point of the day, which is what explains the great breadth. Good trending day for the small caps. Bring up the heat map. A lot of green, very little red, or not very little red, but little red. M&M sulks, Bajaj Auto sulks. So in some sense, it's rate sensitives, banks and autos which have corrected in the session today. There's some weakness in Bharti, yet again about a percent lower in trade. But that's about it. The other problem is though that HDFC Bank, which is the big bulwark of trade day before, isn't quite performing very strongly. But what is doing well? Metals. So Hindalco, Tata Steel. I think across the board, metals have had a really good day. BPCL and ONGC bring up the oil and gas day. LTI Mindtree and TCS bring up the IT day. And I think that's the reason, along with the Reliance Industries throwing in some weight around it, which explains why the market's still trading in the green despite banks sulking so badly. Harsh, but you look at the small caps and you won't think that the market is flat.
Absolutely. It doesn't look like a flat day at all. The Nifty small cap closing at the high point, you did mention 1.6% higher. The Nifty mid cap, we can pull that up as well as the graph if we can intraday. Not as much in terms of the move as we've seen in small caps. We saw it hit a high point maybe at the start of the day, and after that we've seen a bit of a cool off where the mid caps are concerned. Let's pull up the sectoral heat map if we can. You've spoken about the oil and gas sector, the IT sector, the metal sector. There you go. All of those top charts at least. Metals, energy, PSUs doing well, including PSU Bank, and IT among the larger caps doing very, very well in trade today. The ones which didn't do well, auto, a little bit of sulk in the banks, which we did speak about as well. But auto, if we can pull that up just in terms of names, 0.8% lower on the Nifty auto. And that's where all the pain was. M&M Bajaj Auto leading at least the declines on the Nifty auto. And you also saw some bit of negative contribution coming in from an MRF and a Tata Motors as well, which threw their weight on the Nifty auto index. Hero, of course, up 1% or so, so positive there. Let's pull up the BSE 500 before we wrap in terms of the top gainers and losers. And there you go, some big gainers. Kaplan Point, we spoke about that one at close. But outside of that, First Source up 10% or thereabouts. Polymedi also up roughly 8.5% odd. Among the losers, Hindustan Zinc is one we can speak about. Mascon Dock we spoke about as well in the trading session today. Hindustan Zinc, of course, the OFS that Vedanta is, or rather has completed on Hindustan Zinc. Kalyan Jewellers was down around 4% as well. So some pressure there. But outside of that, overall, looks like a very solid day, at least for the broader markets, Niraj.
Small caps in particular. Great market breadth.
Yes, great market breadth. But with that, completely out of time on this edition of India Market Close. From Niraj, myself, everyone who puts the show together, thanks so much for watching.